Discuss where things are headed from here on. Arvind Sanger, Managing Partner, Geosphere Capital Management, joins us now. Good evening, Arvind. Thank you very much for staying up on a Sunday evening for us. Personally, you have to reconcile these two diverging trends for me. We got a GDP number at 5.8% for Q4, and for the month of May itself, even if the GDP was a lagged number, we have rather poor auto sales numbers, especially trucks and tippers, as Sonia has been pointing out. Yet index at all-time highs. Can we go on like this?
I'm afraid the answer is kind of in line with what you've been saying, Lata. I don't think the two can coexist. Clearly, GDP numbers for first quarter of the current fiscal year look like they should be worse than the fourth quarter last fiscal year, because almost every data, whether it is FMCG sales or it's auto sales or it's CV sales, are much worse in April and May than they were in the March quarter. So, the economy is clearly continuing to decelerate. And let's be clear, yes, oil prices going down are helpful, but oil prices went down in 2008. When oil prices go, and the Indian market didn't do well, when oil prices go down because global growth is about to go off the rails, that's not good news for anybody, including oil importing countries like India. So, India is not immune to global forces, and global forces of slowing demand are never good for anybody, any economy. And so I think the headwinds right now we see is that the trade war preference of tariffs that President Trump seems to be so, fond of, have significantly raised the risk of a, lose-lose global trade war. Luckily, India is less exposed to it, but it doesn't mean that it is immune to it. And therefore, I think, that's a negative factor. U.S. interest rates are falling like crazy, but that doesn't mean that the U.S. equity markets are going up. So, focusing on the RBI and cutting rates and focusing on oil price and going down are helpful factors, but they don't offset if there is a global growth slowdown. So I think our fears are more about the global macro. And the Indian micro story, or the India-specific macro story, has also got serious issues. So I think the real hope here, and the positive for India, would be if we get some strong actions by the new government. I guess it's the same government, but with a new mandate and a stronger mandate, to be able to take some serious action to turn around this somewhat dubious economic backdrop that India is experiencing right now. So that's the hope trade, but offsetting that is obviously global risk factors have gone up a lot in the last few days and weeks.
Okay, Arvind, good morning. But that's the issue, right? Where do we decide that this hope trade reaches inflection point? Because right now we have the FI money, which is also chasing the Indian market, and all of a sudden we started to see domestic flows also, make a big comeback. That never sort of died down. It slowed down a bit, but that's also back full time. So there's a lot of money chasing this market. So how do you fight the liquidity?
Well, you don't fight the liquidity, but that money chasing can turn in a dime, right? It just depends on. Right now, the economic data is bad. The hope is that we'll get some meaningful action. RBI cutting rates is not the solution, right? RBI has been cutting rates now a couple of times. It hasn't helped the economy. So RBI's next rate cut is not going to magically turn the economic data around. The question is, can the government take action to both help offset the NBFC kind of liquidity squeeze, which there is no easy answer for, and reignite consumer confidence to go out on a buying spree again in terms of their consumption, and convince businesses to reinvigorate the capex cycle. I think it's a pretty tough order, but we're hearing some news flow of government promising some very bold action. We are certainly going to be watching that with great hope. But also recognizing that the market is got a lot of that hope built into current valuation. So we'd be a little more circumspect about chasing this rally, knowing that clearly there's a hope trade going on.
Arvind, good morning. They say the best time to buy stocks is when the companies are in distress. What do you do with the auto piece now? Because the passenger vehicle industry has fallen 20%, but it's something that the street is well aware of. Do you buy into this weakness or do you stay away?
I think at some point here, the auto cycle will turn, and therefore we would be looking to buy. I think we have the same view on the real estate cycle, where the cycle has been quite a bit in the dumps, but we think that some of the surviving strong companies are going to have an advantage because of the liquidity crisis for the others. Similarly, NBFCs, I wouldn't just say auto is by itself the only crisis sector or the only sector with problems. NBFCs, some of the better positioned NBFCs that have gotten sold off in this, and not just the high flyers. Obviously, they have the high flyers like the Bajaj Finance and the HDFC, which have not sold off, but some of the NBFCs, if there is a fix coming here, it's going to help. You can't have the NBFC sector in a tailspin and have this hope trade work, right? The hope trade can't work without some of the major problems being fixed. So some of the higher quality NBFCs that have gotten hit would benefit if this hope trade is to work. The auto sector, yes, would benefit, but I don't think the auto stocks have gotten as cheap as some of the NBFC stocks have. As I was saying, some of the real estate stocks. So there are areas where we think there is hope for a hope trade without having to pay the high multiples that the overall market is assigning to the overall market.
Okay, which means you are buying now. Net, you are a buyer now.
I'm a buyer of those sectors where there's laggard, but I'm not willing to bet on the overall market. I think is ahead of itself.
Okay, Arvind, what about the consumption piece in India? There's a lot of stocks where you saw a bit of a decline last quarter, but stocks have started to come back already. If you see, the paint stocks, of course, there's a benefit of crude prices, but stocks like Asian Paints, Pidilite, even Tata Global's making some kind of comeback. That's of course news driven. But are you buying this piece?
No, I'm looking for the laggard sectors, and this has been a sector that has done exceedingly well in the last several years. The domestic consumption, and if we are getting into a new cycle here, you're really going to have the leaders of the last few years be the leaders again, and these stocks have never really gotten inexpensive. And we believe that I'm not saying that the stocks will be terrible stocks, but I think on a relative basis, on a risk reward basis, this is not where we'd be putting money chasing after domestic consumption stories just because they've come down from 40 times earnings to 35 times earnings. That doesn't become a great value from our standpoint.
The RBI policy is the big event that the market's going to watch out for this week, Arvind. A rate cut seems to be a certainty, especially after the weak GDP data. But if it is indeed, a 35 basis points cut and some liquidity boosting measures, as a lot of people are expecting, do you think it will do anything to the markets at all? The equity markets, that is?
My fear is it'll be a sell of the news. With the markets running up, I'm not sure what rabbit they can pull out of the hat, because at the end of the day, one of the things that has been, somewhat a little bit bigger headwind than we certainly expected is this NBFC continuing crisis. It doesn't seem to be resolving itself in a neat fashion. So I'm not sure that there's any silver bullet that the RBI can come out with in this policy that'll give investors the confidence that we've put the line under the crisis and the NBFC problems are behind us. I think it's going to be a gradual recovery, and it's going to be having some of the problem entities get washed out, get taken over, get resolved, get written off, a combination of all of that. And as we've seen in prior situations, certainly as we saw with the with the bad loans for the banks, that even with the new bankruptcy law and everything that has followed since then, the NCLT, it's taken its own time. These things take a while to fix. There are no quick, easy magic bullets for that. So therefore, I think RBI's policy will be certainly a step, hopefully in the right direction. But it's not going to say, okay, we've marked the bottom and everything can move on from here. But we think if you're going to have a real recovery in the economy, in the auto sector, in overall economic sentiment, you are going to need to see both from RBI and from the government side actions that give us some confidence that the economic news on the NBFC front is not going to continue to be a headwind for the market.
Okay. Well, we'll have to see. There should also, of course, the NBFCs have to, on their own, take action to get new capital, which I believe we have. Our colleague Nisha has just broken a story about DHFL. So let's hope for that. Thank you very much, Arvind Sanger, for joining us.